So let me now start by inviting Mr. Krishnamurthy to share his initial thoughts, first about the banking sector or the financial sector in general, and particularly focusing on what he thinks would be the changing contours of NBFC, the way the country has decided to progress. Krishnamurthy, all over to you.
Nice to be amidst you to share some of the thoughts in this. And I just want to tell you, changes is the only thing which is permanent in the world, in anything, whether you are in physical body or system or anywhere. But the kind of changes that are coming, the speed with which they are coming currently, it's amazing. And I tell you, if you miss something for 1 month in any sector, you lock yourself without watching anything, news or anything, and come back, you will find in a different world today. That is the kind of changes that are taking place. So it's very, very important to understand what exactly is happening. But today you must have the ability to visualize what is possible and what should be possible. Otherwise, we become redundant in the current environment. I always kept an advertisement with me. I cherished that advertisement. It's a very old one, which said, when aircrafts came, they say at best it can be a toy for children, but never can defend but later on today you find the aircraft flying with 800 people, 900 people effortlessly with tons of luggage of each and everybody, and you know how we load the plane. And it is amazing that changes takes place. Now, financial sector is cannot be alien to that. As Mr. Padmanabhan said, the changes are taking place. And Reserve Bank has been responding much more with agility than what it used to be. Previously, Reserve Bank of India thinks they used to say very slow, but today it's much, much faster, and it's with amazing speed things are taking place. Now let us look at the banking system. If you take 20 years back, if you walk into any bank, except the board difference, everything will be the same. In fact, when I was in a commercial bank, when I went to a government office for mobilizing deposit, he asked me, why should I give all of you do the same thing? What is the big deal? Why should I specifically give it to you than others? What is the difference between you? I was very young. I just got bold. I didn't know what to say. Except that I say we are very less here, we need support, except that story, nothing else. But today, if you go to a bank, the kind of products they offer, the speed which they offer, the type they offer, they are totally different. And Reserve Bank has recognized that recently in day for yesterday, State Minister of Finance, when he talked about that, he said, why all the public sector banks should be the similar product, similar, why not to be different, create a niche in the market and each one be different. See the kind of thinking where it has come. It's not from the commercial banker, it is at the bureaucracy. Now the concept of bringing about small finance banks, payment banks, and differentiated banks concept which is coming, they are all directing upon the one thing, that you are going to find more and more diversified banking entities, and you will get an option to choose what you want. Again, 20 years back, you can buy only 2 cars, either Fiat or Ambassador. But I tell you, today you just don't know if you want to buy a car, even if you look for 1 week searching for a car, you will not come to a decision. There the decision was forced on you. South, Fiat, come to north, it will be Ambassador. But similarly, the changes have taken place so aggressively in financial sector, you have been given option. But all these options have been mainly to the higher operating accounts. But the lower sector continued to be, I will not say neglected, were not given the due attention, and as a result of this, changes are taking place even that domain, and that reflection is the small banks and payment banks. The focus of small banks and the payment banks, if you see, it will speak volumes about the change in thinking. Small banks are not meant for corporates. You see the size of the loan, the kind of areas operation, the number of branches they should have, all those things focuses on the lower segment, MSME and all those things. And payment bank, I was working for one group to get the license, where we had intensive debates and discussions. I said, please focus only on one thing, rural and unbanked sector. Don't talk in your business plan anything about that. And they got the license, I am very glad. So the whole idea is shifting, that other things are taking place on its own where you provide it, but this should percolate down also. And that is why the diversification is taking place. Now, what kind of financial inclusion was there? Is it financial inclusion new? It's not new as such. They assess, they take security, they give money, and they also recover. Their NP is low, and please remember, they accept risks which normally a commercial bank will not accept as a acceptable risk for lending. So you need, every economic activities need credit. But the credit cannot come from a highly regulated system which puts so many conditions. Now, after this, even governor was telling, don't pressurize too much, then there may be credit decisions may not be taken. But NBFC, nothing happened. Their credit decision continues. They will continue to give and they do it. Now, you see the growth of NBFCs. The total assets of the NBFCs are almost equivalent to 15-16% of the banking assets. It's growing fast. And therefore, I feel in the coming days, the commercial banks are going to face severe competition from SFs, small banks, payment banks in remittances, small banks in financing in the lower segments, and NBFC is competing both from the wholesale to the small center. Now I stop here.
Thank you very much, Krishnamurthy, for that overall sweep. Just 2 points, please note down. We will try to revisit this as we move on. I think one of the things that has changed in respect to this payment bank, small bank is, for a long time the government and the Reserve Bank started talking about, or has been talking about, the financial inclusion as having to have a savings bank product, an insurance product, a credit product, and a payment product. Now, what has really happened in this is, now there is recognition that it need not be achieved at the same point of time. You can disintermediate, bring people, different players to take care of one leg of this. That will be the entry into the financial system, and whether that will scale up. So that's a new experiment. That's a disintermediated way of doing things. So that's one issue that we are flagging. Is that the right way forward? I will ask my panelists to comment a little later. And the second is, from whatever Mr. Krishnamurthy said, one of the reasons why the NBFCs grew up the way, the MFIs, the NBFCs, the way they grew up, was Reserve Bank started with a light touch regulation. The things scaled up. There were few issues that happened. Then you ensured that there was a process of consolidation. Now, is it the right way forward, or is it too much disruptive? Again, I park this question.